Bitcoin is crashing again and is being dragged down by the traditional markets. However, we also have new inflation data that has led to a small sell-off. Let's take a look at that. Additionally, Cynthia Lummis talks about new ways to buy Bitcoin in the USA now. We have an assessment from the U.S. Central Bank, which is now talking about their forecast, so how things will proceed. They remain skeptical here, and there are certainly critical things we need to consider. The only relatively positive thing now is that the EU is making trade concessions and might be approaching the USA. There are exciting stories happening again with the tariffs. And then we actually have a very interesting statement from Strategy, which assumes that GameStop will potentially buy a lot of Bitcoin. But we start with the inflation data. So we see Bitcoin has already fallen all day. It has already gone down, and now the inflation data has come out again. Then it fell a bit further because we actually see here the PCI inflation in February. The Fed's preferred measure of inflation was at 2.5%, matching the expectations of 2.5%. So that was all fine. And then here the core inflation, the PCE, rises to 2.8%. Exceeding the expectations of 2.7%. The core PCI inflation for January was also revised upwards to 2.8. Core inflation continues to rise, and that's a bad sign for the markets. It's not completely dramatic or anything, which is why Bitcoin hasn't crashed massively, but we have seen a bit of a drop again after these data were released. First, there was the general market uncertainty pulling Bitcoin down, then the inflation data came out, pulling Bitcoin down a bit more, because we now potentially have fewer prospects for a rate cut. If inflation is high, central banks can't lower interest rates. If central banks don't lower interest rates, there won't be new liquidity, making it very, very difficult for Bitcoin. The Kobeisai letter states that this is the perfect recipe for stagflation in the year 2025. In light of the ongoing trade war, the inflation data for March will be even more significant than we are. We need to pay very close attention to what happens here. Jerome Powell also talked about potential stagflation at the last central bank meeting. Well, not stagflation, but he talked about stag and flatiron together, which is essentially the same as stagflation. What is somewhat positive here is that the EU is making trade concessions to avoid mutual tariffs from President Trump. So Donald Trump announced the tariffs here, and now the EU is making a concession, wants to lower the tariffs or has already lowered them. I'm not entirely sure. This is definitely potentially more of a bullish sign, but it hasn't caused the market to go up or anything like that. And now we are actually looking at the assessment of the Fed president. This is the president of the Richmond Federal Reserve here in the USA. There are several Federal Reserves here, so multiple central banks, if you want to put it that way, in the USA, and several Fed presidents. Later, we'll also look at the bullish things Cynthia Lummis is saying, the new ways to buy Bitcoin, what's happening with GameStop, and some very, very exciting things happening here with Strategy and Michael Saylor.
Richmond Fed President Tom Barkin speaking at this hour saying that a moderately restrictive stance from the Fed, quote, is a good place to be. But he talks a lot about uncertainty, saying the Fed is well positioned to adjust if conditions shift. The Fed is, quote, waiting for the fog to clear. And he said sentiment could, the decline in sentiment could be quieting demand. Here's his quote that's, I think, the most important thing he said. With all this change, a dense fog has fallen. It's not everyday forecasting is hard type of fog. It's a zero visibility, pull over and turn on your hazards type of fog. He goes on to say business is not pulling back, but they're not pushing forward either because of the uncertainty. It's hard to imagine firms hiring in the current environment or hiring more than they are right now anyway. A number of large firms, he says, have warned about weaker consumer demand, and credit and equity markets require stability, which it appears they're not getting. I don't know, Morgan, at some point it sounds like the Fed is maybe talking to or even pleading with the administration for some clarity here.
So he says very clearly here, or it's not the Fed president speaking, but the news talking about the Fed president. It's clearly stated here that the outlook is still restrictive. That means they are in a cautious position. That's exactly what the market doesn't want. The market wants the QT to stop now and then the QE to begin, bringing in massive liquidity again. I mean, this is often a very, very good indicator. I don't want to say a trading indicator because I'm not a big fan of trading, but when liquidity comes back into the market, you can really start placing orders again, and the market should pump upwards again. We always see the correlation between liquidity and the Bitcoin price, but at the moment we have a more restrictive stance here. He also talks about a fog, a kind of mist, which refers to the whole trade war situation. When this fog clears, it will become ultra bullish again in the short term. I always talk about being ultra bullish in the medium and long term. In the short term, however, you don't really know where it's going, and it's a short-term assessment. He's talking about the fog here, and when this fog clears, it will look very, very bullish again in the short term, but some things still need to happen for that. Perhaps inflation needs to become more stable, or the trade war issues need to finally stop, or at least there needs to be some security in this area. It doesn't even necessarily have to stop, but there needs to be some security here. The market needs to know what's currently happening here, and the uncertainty keeps bringing sell-offs into the market. I mean, Donald Trump won't like hearing what's currently going on here either. Yesterday, I showed a video where I had a central bank president, I don't even remember which one it was, from which central bank, who then said, hey, he was even in favor of only one rate cut this year or possibly even no rate cut at all. Now, the next president is very, very cautious. So, we are currently not seeing any extremely expansive policy from the Federal Reserve, and that's always the crucial factor we need to look at. What is the Federal Reserve doing? Is there new money, or is there no new money? But here it sounds more restrictive, and we can currently see that reflected in the Bitcoin price. And now we had a very interesting statement from Cynthia Lummis, who talks about new opportunities to accumulate Bitcoin here for the USA and many more exciting insights. Make sure to check it out.
We could take our gold certificates, which are currently held at the Federal Reserve on the books at their 1974 value, which is $42 an ounce. Now, most of us know that gold has gone closer to $3,000 an ounce. So if we took those gold certificates, not physical gold, let's keep our physical gold. Let's take the gold certificates, bring them up to current fair market value, and convert them to Bitcoin. Other possibilities that we were just discussing in the back room that are really exciting is the United States has energy producing assets. Let's use those to convert the energy production capabilities of the United States government to producing Bitcoin. That's another way that we can convert our royalties that we usually get in cash into royalties in kind by way of Bitcoin. And there are a myriad of other ideas for fulfilling the goals of President Trump's executive order by creating a strategic Bitcoin reserve without expending a single new dollar from the taxpayers.
And that's quite a bold statement she's making here. So she's clearly saying here, hey, don't sell gold in physical form. It was always unclear whether she meant the physical gold should be sold or the certificates, right? If anything, only the certificates should be sold or maybe used as collateral or something. But the much more exciting part is when she says here, hey, we're now looking for new ways to buy Bitcoin in a budget-neutral manner. Then she actually makes the pitch. Not the bitch, but the pitch. We have a lot of energy here in the USA. We have energy sources. Very, very cheap electricity sources. Potentially maybe even renewable energies or something like that. And we could convert this energy, could use it for Bitcoin mining, could even use surpluses and convert these surpluses into Bitcoin. I recently showed a video, not an interview, but a video from Fabi from TerraHash, who is currently in the USA looking for cheap electricity sources because there are sometimes surpluses, sometimes electricity that is not connected to the grid, and so on. And if you take a small part of that and invest it in Bitcoin mining to generate Bitcoin, you would have a perfect opportunity to use electricity that isn't being used, needed, or is simply wasted. So it might be needed, but it just goes to waste if you can't store it anywhere or feed it into the grid. And then you can engage in Bitcoin mining here, accumulating Bitcoin in a completely budget-neutral way. And that would be quite an incredible story. And she also says there are other crazy ways to accumulate Bitcoin in a budget-neutral manner. So we need to keep a close eye on that. By the way, if you're looking for a good way to store your Bitcoin optimally, check below. I'll include a link to a TREZOR hardware wallet. Here you can easily, securely, and simply protect your Bitcoin from theft, hackers, and attacks. You are completely self-sovereign with your own hardware wallet. Use the code BitcoinHotel to get a discount when purchasing a TREZOR hardware wallet. And if you want to buy Bitcoin, make sure to check out Bitcoin. Here, with the code BitcoinHotel, you can also get up to 20% off the fees when buying Bitcoin. It's an absolute recommendation from me. Make sure to check out Bitcoin. It's super simple, easy for beginners, intermediates, and professionals. And now we have a very interesting tweet here, where we see Strategy tweeting about various Bitcoin companies and how much Bitcoin they have. And here we also see that Strategy suggests that Mara might soon face competition. It says here that GameStop is planning to buy Bitcoin. So let's take a look here. We see Mara has Bitcoin, then we see Riot, Tesla, Coinbase, Block, and Strategy has over here. And if we look here, Mara has Bitcoin. If they get competition here, then GameStop would have to at least maybe. So they would need to buy a significant amount of Bitcoin here. This view is already very, very interesting. So Michael Saylor might even be pitching to GameStop to buy more than just Bitcoin here. And in that context, I found a super exciting interview clip from Jesse Myers, who is a MicroStrategy expert and frequently uploads Bitcoin videos, explaining why MicroStrategy could massively pump up the Bitcoin price in the future. And he actually provides an explanation of why Bitcoin functions like a kind of pump and how massive capital will flow into Bitcoin through the bond market, especially via the new preferred stocks Strike and Strive. That's what they're called, Strike and Strive, and why this is a massive catalyst that no one currently understands.
But yes, Saylor is carrying around his model. So if you've seen this diagram, Jesse put it together. And this is the framework Saylor is using in the market. I think we are at a turning point right now. It's a bit of a hockey stick moment that I believe we will experience specifically for the strategy.
Because I think the mental model I have of the strategy is that it's a pump to accelerate the flow, the osmotic, natural, organic flow of capital from bonds where you don't get great returns to Bitcoin. And the entire design of the strategy is to accelerate this, to pull capital out of the bond market and invest it in Bitcoin. And they've massively upgraded their machines, right? So, I don't think people appreciate what Strike and Strive offerings achieve, because it has massively reduced the friction in raising capital, from individual convertible bonds to just throwing ATM into the market to get dollars to buy Bitcoin. Whenever the conditions are available, and they will be able to scale that massively. So they will go from these, billion-dollar convertible bonds to dozens and eventually hundreds of billions of dollars raised each year through sales. I think Strive will be the bigger one, in my opinion, in the market. And now they're talking about a massively upgraded pump to siphon capital from the bond market and invest in Bitcoin.
The reason I keep saying it's an economy is because governments, as we all know, print money recklessly. Right now, Saylor is very, very methodically printing stocks, and he has 3 different printers he's using at the moment. And I think people really need to understand. I don't think people have realized it yet, but what it really does, the whole concept, if we go all the way back to him possibly conducting a speculative attack in the term of dilution versus accretion. I think those will become old-fashioned terms. And I think there will be a future where Saylor, using the ATM, will draw people's attention to the market more than trying to make posts on Twitter, trying to say that he's diluting the shares and that the price will drop, and so on and so forth. What he's doing is printing shares today for tomorrow's accretion. And this model is what he's doing right now. Another version of the model, whether through convertible bonds, through strike, through misunderstandings, or through conflicts. He uses his shares as a means to accumulate the most pristine asset in the world. And I think people really underestimate how significant the turnaround will be that this will bring about. And that in these 1, 3, 5, and 10-year intervals.
Jesse, I like the term the pump. It's almost like you're sucking capital from the bond market with a straw. That's how it was before, and now you've opened a flow. Now you don't have to suck with a straw anymore. You have this flow of capital that could potentially flow to you. And it will just take time until the market figures that out.
Because, and this goes back to an old visualization by Tracemeyer. He talked about Bitcoin as a blueberry, where you can connect the municipal water supply to this blueberry, and it can expand infinitely. That's what we're talking about here. We're pumping more and more capital and tapping into an ever larger pool of capital by now, addressing the entire bond market instead of just convertible bonds.
I found this to be a very, very interesting presentation by Jesse Myers in the whole session, where you can really see where the potential lies, because many people don't understand what it's about with MicroStrategy. It's really about absorbing new capital, just like with the Bitcoin ETFs, where a new door or a new gate is being opened. And it's the same with strategy. In the short term, we need to keep watching how things progress. It could very well be that there will be further sell-offs. In the medium to long term, I am very, very positive. Feel free to write in the comments if you're getting scared and worried that Bitcoin might drop to $0. Or are you quite optimistic, taking the opportunity to buy Bitcoin at a lower price and buy the dips? See you. Peace out.